Good late afternoon and thanks for joining us. I'm Holly and you're watching 𝐊𝐴𝐴 TV live from Sydney. This is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. In this show, we'll be looking at the overall ASX 200 performance for the day and also exploring the gainers and losers. Then we'll discuss the newly listed company 𝐴𝐴𝐴, which has made its debut today. This will be followed by shares that grabbed the limelight today, like AusNet Services, Transurban, Regional Express, HT&E, 𝐺 Education, and much more. And then I'll wrap up the show by sharing trading updates from the Asian markets and on the last segment, an update on the cryptocurrencies space. So let's dive straight in. Well, the Australian shares ended sharply lower for the second straight session today as weak commodity prices dragged blue chip mining and energy stocks. The tech stocks also reeled under selling pressure, mirroring weakness in its US counterpart, the Nasdaq Composite. The caution prevailed in the market ahead of US Federal Reserve's meeting as investors seek clarity on bond tapering program. Only adding to it, the persistent COVID-19 situation in the country, as well as the bearish cues from global peers, also dented market sentiment. The benchmark index ASX 200 ended 2.1% lower, led by material and energy stocks. Early today, the index opened lower and declined as much as 2.3% to hit a low of just over 7,233, setting a new 20-day low record. On the sectoral front, all of the indices ended in the negative terrain, barring utilities, led by materials with a 3.6% loss. The material sector emerged as the worst performer for the second straight session, as a continued fall in iron ore prices dragged the mining stocks to record lows. Index heavyweights BHP Group dropped over 4% to hit its lowest level since the beginning of this year, whereas Rio Tinto fell over 3% to its lowest in 10 months, and Fortescue also slipped just over 3%. Materials was followed by the energy sector, which skidded 2.7% owing to a fall in crude oil prices. These prices remained under pressure as easing threats of a storm in the US exerted pressure on the prices. Among others, information technology, financials fell over 2% as well, while consumer discretionary, A-REIT, industrials and telecom settled with over 1% in losses. Backing the trend, however, the utilities sector emerged as the lone gainer, rising 1.4% in an otherwise weak broader market. Let's now have a look at the top gainers and losers of the day. Well, the worst performer on the ASX pack was none other than iron ore explorer Champion Iron, which ended a whopping 12.5% lower. Some of the other top laggards were nickel pig iron producer Nickel Mines, lithium miner Pilbara Minerals, resource company Lynas Rare Earths, and mineral explorer Cobra. Meanwhile, the energy firm AusNet Services emerged as the top gainer by rising a very handsome 18.7%. Some of the other top performers were alcoholic drinks retailer Endeavour Group, Argo firm New Farm, Auckland International Airport, and healthcare firm Helios. With that said, let's now shift our lens to the stocks that grabbed investor attention today. Well, the first one is none other than newly listed company 𝐴𝐴𝐴, which tumbled 17.5% on the first day of trading. The stock of the iron ore explorer fell in line with other material stocks amid a fall in commodity prices. Based in Perth, the exploration company raised $4 million by issuing 20 million shares at 20 cents each in its IPO. 𝐴𝐴𝐴 is focused on premium iron ore development opportunities on Cockatoo Island, located in the northwest of WA. Well, now it's time for a small break, but stay tuned because I'll be right back with more trending market updates. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly,
apart from tracking the daily market charter.
Be on top of the latest news and announcements
with 𝐊𝐴𝐴 TV. Welcome back here with the market close commentary. Let's now have a look at some stocks grabbing investor attention today. Well, first up, shares of Australian energy company AusNet Services gained as much as 20% to hit its 52-week high. The share price of the electricity transmission network operator jumped after it received a takeover bid from Brookfield Asset Management worth $2.50 a share. The infrastructure affiliate of Brookfield has proposed a non-binding offer to acquire 100% stake in the company, valuing AusNet at $9.6 billion. This will be reduced to the extent that AusNet pays or declares a dividend to its shareholders prior to the implementation of the proposed transaction. Meanwhile, shares of Charter Hall Long WALE REIT and a Charter Hall Group traded lower upon plans to acquire a stake in Ale Property Group. Charter Hall Long WALE REIT and Charter Hall Managed Trust, on behalf of Host Plus, have agreed to acquire 50% stake in Ale Property Group, each through a consortium. The deal is expected to close by mid-December this year, and on top of that, Charter Hall Long WALE REIT has also acquired 2 industrial properties in Sydney and Brisbane for a total consideration of $67 million. And next up, shares of Transurban Group, which is one of the world's largest toll road operators, entered into a trading halt today, citing a pending announcement related to capital raising. Shares of Transurban closed 0.93% higher at $14.18, and the stock witnessed a surge in volume trades as 8.28 million shares changed hands over the counter, while the market cap of the company surged to $38.92 billion. The Australian toll roads operator plans to raise $4.22 billion by equity sales to help fund the acquisition of WestConnex, one of the world's leading road infrastructure projects. The fundraise includes $3.97 billion through a fully underwritten 1-for-9 entitlement offer to eligible security holders at an offer price of $13 each. Adding to it, another $250 million will be raised via a placement to consortium partner Australian Super at $13.07 per security. And aside from this, shares of Regional Express dropped after the airline made vaccinations mandatory for frontline staff. The rival companies Qantas and Virgin have already made such announcements, and Rex has directed its frontline staff to become fully inoculated against COVID-19 by the 1st of November, adding that 90% of its staff is already on track to meet this deadline. And next up, shares of cybersecurity company Arctis fell over 2% after it agreed to purchase select assets of Cypherpoint's software division and European operations. The assets comprise the intellectual property rights to CP Protect, Cypherpoint's advanced SharePoint protection solutions, and CP Discover, a data discovery and classification platform by Cypherpoint. And next, the ASX-listed media and entertainment company HT&E announced today that the shareholders of Soprano Design have decided to terminate negotiations to complete the sale of Soprano to Link Mobility Group Holdings. Following the announcement, shares of HT&E dropped over 3%. And ASX-listed G8 Education announced that it has entered into an agreement to acquire Leo Pty Limited, a provider of in-home childcare and NDIS services, for an upfront cash consideration of $2 million. The total potential consideration payable is $9.5 million and is contingent upon earnings targets being achieved over 3 years, from the calendar year 2022 through to calendar year 24. G8 Education is a leading provider of quality care and education services in the country, and the acquisition will be financed from the company's existing cash reserves. Now it's time for another short break, but stay tuned because I'll be right back with more trading market updates.
Tune in to get the latest information,
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV. Welcome back to the market close commentary on the last trade. Let's have a look now at some stocks grabbing investor attention today. Well, first up, a look east towards the Asian market performance. Shares in the Asia Pacific region witnessed bearish trading today, tracking weak cues from Wall Street. This week is going to be a power-packed week as nearly a dozen of central banks will hold their meetings, led by the US Federal Reserve, which will announce its monetary policy on Wednesday. Markets in Japan, South Korea and mainland China were closed for holidays as Hong Kong's Hang Seng emerged as the worst performer in the region, with a sharp loss of 3.9%, its biggest since July. And China's real estate crackdown rippled through the markets, with shares beleaguered Chinese developer China Evergrande falling over 17%, followed by Henderson Land Development, which dropped 12% as well. The Hang Seng Properties Index nosedived 7% to hit a 52-week low amid losing fears that the China contagion. Evergrande Group will intensify its property clampdown to the financial hub. And all this as the Hang Seng was followed by Indonesia's Jakarta Composite, which fell 1.2% as well. And the Straits Times Index dropped 0.45%, while Thailand's SCT Composite traded a very similar 0.55% lower. Meanwhile, Taiwan's weighted index also traded marginally lower, but bucking the trend, India's BSE Sensex rose 0.12% in a volatile trade. Meanwhile, Wall Street ended sharply lower on Friday amid fears of a tax hike. And the S&P 500 dropped 0.91%, while the Dow Jones tumbled 0.48% and the Nasdaq Composite closed 0.91% lower. Investors became cautioned ahead of the highly anticipated US Federal Reserve Bank meeting this week, as the central bank officials will announce monetary policy statements on Wednesday, which will give us more clarity as to when the central bank will start tapering its $120 billion monthly bond buying program. Market experts expect the scaling back of economic stimulus to begin in November or December this year. And now in the last segment of the show, let's have a quick look at the crypto market performance. Well, the major cryptocurrencies were bleeding in red today as investors remained sidelined ahead of the US Fed meetings this week. Investors seek clarity on the central bank's bond tapering program, and in a fresh development in the crypto space, the blockchain-based music streaming platform Audius has raised $5 million in a strategic round of funding from some of the top names in the music industry. Artist investors in Audius include Katy Perry, Nas, the Chainsmokers, Jason Derulo, Pusha T, Steve Aoki, and Linkin Park, as well as Disclosure. And cryptocurrency news portal Decrypt reported this news. The platform claims to have nearly 6 million monthly active users as a decentralized music streaming application owned and run by an open source community of artists, fans, and developers. To Bitcoin now and its price, the world's largest crypto by market cap was down 4.5%, and the global market cap of the virtual currency stood. Ether, the world's second largest crypto, fell over 6%, as the coin declined 1.3% in the last 7 days. Meanwhile, the price of Cardano, the third largest crypto by market cap, fell a whopping 7%, while Dogecoin fell an identical nearly 7%. Other virtual currencies like Tether, Binance Coin, Litecoin, XRP, Stellar, Solana, and Uniswap were also trading in the red zone. Well, that is a wrap on the last trade, but we'll be back tomorrow morning with our first show on the pre-market opening scenario. Holly Shields signing off.